Hey folks, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis on Friday, July 24, 2015. What a week it was. We hit the pivot top at 213 on the spider. We went down 5 days, 1, 2, 3, 4, 5, and that's all she wrote. Right into the final level of support, and this won't be the final level of support, but it was the near-term final level of support, which was at 207.57, and our low today happened to be 207.60, if I have that right. Yes, I do. 3 cents off, and I call that a direct hit. So, what happens from here? Well, I would suggest that a couple of reasons why I think the market will bounce early next week and work off some of this oversold condition. Number one, and first and foremost, really the main reason is because, and by the way, you can see the volume pick up this week. Each and every day the market was down. The volume picked up slightly. But here's the thing. Today's volume was, let me just get it, the final volume count, 115 million shares. Basically, what that tells me is, and that's not great volume, especially for a day that we had, this big down day here. It was only 20 points down in the E-mini contract, $1.77 on the spider, which is less than 1%. So it's not a huge day, but it wasn't on huge volume. And what that tells me is nobody is yet sold on the fact that the market may have topped. Okay, nobody's sold that this could be a real correction, and that normally happens at tops. It normally happens in these areas here. Like I said last night, it's tough to kill a bull, and it's going to take some convincing. So what will normally happen from this point forward is, let me show you kind of what I'm thinking is going to happen next week. I would think that we're going to do one of these jobs here. We're going to do something like this, okay? We're going to go up for about 3 days, and then maybe even into this high here or slightly higher, and then we're going to do this again. And unless we get above 212, we can go into 212. We can go right up into this area here. But unless we can get above 212 and certainly above the pivot high and close above the pivot high, then I'm going to suggest that the top is in. I'll be proven wrong when and if we close above 213, what was it, 213.13 or 213.18. So unless we can close the day above 213.18, we're likely to see a retracement of this down move here. Now keep in mind, this down moves from 213.18 to 208. We'll just call we finish close enough to 208. Is 50 S&P handles. It's $5 in the SPY in 1 week. That's a big deal. That doesn't happen all the time. So it's not out of the realm of possibility, and it is likely that we'll see a retracement of this rally next week. Where that retracement would go, it could go up into this area, the top end of this candle here, around 210, 210.30, 210.25. That's a likely stalling point. That's where we're going to find a lot of resistance. And that also would be most likely, and we'll know more when we get there, if we get there. So don't do anything Monday based on that. But that would almost likely, or not almost, that would likely be another point of a shorting territory if you're not already short the market. If you're short the market and we begin to rally next week, you have two options. Take some off and let it ride because we're going to turn down again. Or you can take it off if we start to rally up and then reshort at that 210.30, 210.25, 210.50. That's probably a likely area that we'll go to next week if we did bounce. Now, the flip side of that is we break down and we head. The next stopping point would be the 50-period moving average on the daily chart, which would be at 206.41, 206.50 by some point next week. You know, we'll see. I'm really leaning towards, my bias is on the side that we bounce next week, but it's not a mathematical reason why. It's not a market reason why. It's more of an experience reason why. I just think we're a little oversold, and it's completely likely that we'll get some kind of a rally. But look what's happening here, okay? We discussed the 213 as the top end. 212 to 213 was our target. The red line was 212. I said the market's going to start to stall out. The top end, which was the upper purple line, is 213. We pierced it by 18 cents, and we rolled over, and ever since we've been on a downtrend. I want to show you something else that's a little bit interesting. I left the Head & Shoulders neckline in on the E-mini contract, and look what happened today. We came down, I reworked the numbers on the E-mini contract, and we came down to the 2069.50. In fact, the low today in the E-mini was 2069.75, one tick away, 25 cents away. And we bounced off that, and it was really also coinciding with the Head & Shoulders neckline. Remember the Head & Shoulders that we were watching, the failed Head & Shoulders pattern, right? We had our left shoulder, our head, and our right shoulder. And no, I'm sorry, I misdrew that. Pardon me. It was the, let me draw that again, okay? It was the left shoulder, head, right shoulder, okay? We begin to break down, and it does not complete. The completion was down here. It didn't complete. It failed. We rallied over and above the neckline, and that's a failed pattern. And then I said, if we get a failed pattern, we'll likely get a move equal to what the completion would have been in the other direction. And what happened? There you have it, okay? So this is all math, folks. This works, and you know it works. You've been with me a long time. Most of you have been with me a long time. It works, and we're going to stay with it. Just stay with me. We've got this market with it on a pretty good rhythm right now, so there's no reason to deviate. So I just thought it was interesting that we hit the Head & Shoulders neckline again, and I'm going to actually finally take that off for good and get rid of it because it's really not valid. We don't need it anymore. I just found it interesting. So I've got new numbers in there, and the next target on the downside is 2057.25 in the E-mini, and then it would be the 200 period moving average down here at 2047, and then we'll just keep giving you the numbers as they come. If we bounce up, you're going to see most likely 20, we finished at 2078.50, so that's close enough to 2080, and then we'll see 2091, and then we may see an attempt at 2100, which is completely likely reasonable target, and then we'll see what happens from there. But we'll know more Monday, and then I'll update you Monday, and we'll go from there. Okay, so that's the story in the S&P complex, if you will. Gold. Look what happened today. The other day, well, all week long, I was saying that I was not satisfied with the 2075. We hit 2080. That was good. I said, but I'm not completely sold that we won't see a retest and or 2075 hit. What happened today? Low of 1075. So 1072.30 was hit, and we reversed, and that was satisfactory. That satisfied the downside target, and I think we'll see higher prices into next week. We're certainly going to see a pop over 1100 next week. In fact, I would expect us to see Monday. In fact, here, I'm going to even draw on a line for you. Monday, it's completely reasonable and expected that we'll probably see back up to 1105 and higher, but at least 1105 Monday. And that would be my first area of resistance, my first target. And then after that, we'll probably take a run towards the 200 period moving average, but nothing's going to go in a straight line. You're going to see some backing and filling, some consolidation, but higher prices are coming. And then remember the 1130. We're going to take a run at that 1130 that I mentioned the last couple of days. You just have to get there one step at a time. But now the gold market did satisfy the 1075 target that I had, and so that makes me feel better. It makes me sleep better at night. I'm not going to wake up at 2:30 in the morning going to look at the gold market, finding out if we hit the 1075 target. And that's not funny, that's actually true. I do that. So it doesn't bother me. I've been doing it a long time, and I can't help myself. So now I feel better that the target was hit at 1075. Okay? And for those of you who are GDX players, we saw a nice reversal in GDX today, and this portends higher prices into next week. Let's see if we have a tail. I didn't see if we have a bottoming tail. No, but we have a reversal day. We have an engulfing candle, and this is a high volume reversal day. It was 138 million shares. Remember this day on 160 million shares down? I said, we need to see a reversal day on volume. Well, guess what, folks? Your reversal day on volume is right here. Okay, this green candle is a reversal day on volume, and we got it. So you should see higher prices coming in the GDX along with gold. Okay, along with the gold futures market. So we're going to see some higher prices. Our target is going to be, first you're going to find a lot of resistance at this top end of this candle here, which was the big flush down with 138 million shares, or 160 million shares, pardon me. Once you can get through that, then you're going to take a run at the gap fill area over here, okay? But that's going to take some work, and we're going to take it one day at a time, but those are your targets in the GDX complex, if you will. Okay. Oil. Another market that satisfied the target. Now I don't have to wake up at 3:30 in the morning checking the oil market. We hit the target, satisfied the target today. And what was that target? $48. What was I telling you? $48. Where did I tell you the market was going from up here? From up here, $48. From way up here. I told you up here, $49.50, then $48. And guess what? 48 was satisfied. We hit a low of 47.72, and then we popped back above 48. But the oil market is not the same as the gold market. So here's the deal in the oil market. Crude oil, while we closed above 48 today, and that's a positive, we've got to see more. Why? Because as we know, we know that this is a what? Bearish pattern. So we can certainly see lower prices coming in the oil market. Even though we closed above 48, it's not out of the woods by any stretch. We can certainly see lower prices. And if we close hourly and then the day below $48 next week, then we're going to see back into the mid-40s. And by the way, I do think that's coming. I think it's very possible. You can certainly see a bounce up back above $50 first because there's a lot of short covering that's going to take place at some point, and there's a lot of bottom fissures that are going to take place at some point, but you're going to see lower prices coming. But in between, we could see rallies along the way. But we satisfied the $48 target for now, and let's see what next week brings. Okay, I'm going to get a good night's sleep tonight. I don't have to worry about, or Sunday night, I don't have to worry about checking the futures because my targets are satisfied. Makes me feel better. Okay, the bond market. We're going to look at TLT. And TLT, we had another up day in TLT, and we had, where did we stall out here? We stalled out at 121. Really 121.40, 121. What was the high today? High was 121.55, so we stalled out at 121.50. That's fine. What was that weekly target I showed you last night? Oh, that was way up here. We didn't even sniff that. Okay, so I would say that lower prices should be coming in the bond market. So if we see the market rally, the stock market rally to work off some of the oversold condition, then I'm going to expect lower prices coming in the bond market. We went a little bit higher than I would have thought. You know that my upside target was here, and we went slightly past that, but that's okay. Why? Because we got in here, right? So what difference does it make? Anybody long made a ton of money all the way up. So now what I'm saying is we're going to see, we should see some lower prices to work off some of this, what? Overbought condition. And that's completely normal. So if we see lower prices in the bond market coupled with higher prices in the stock market to work off some of these overbought, oversold conditions, that's completely normal and expected behavior. And that's what I am expecting next week. Okay? The dollar. The dollar did nothing today, just moved sideways a little bit. We came back to test the underside of the 97.75, failed, went back down. I would think we're still going to see slightly lower prices. I've got to see the 20-period moving average hit next week for me to feel better about it. And I'm not looking for higher prices in the dollar in the beginning of next week. I'm certainly looking to continue lower prices because remember, over here, this week, this was a cycle top, okay, short-term cycle top, and I said we're going to see several days of downward pressure, and that's exactly what we've gotten. So the markets all are acting completely the way the schematic mapped them out, and I'm completely satisfied with everything that's going on, okay? I'm going to talk about one stock in particular today, which is the new position that we put on, which was the ultra-short, which is the BIS, ultra-short NASDAQ Biotech Index. So it's the reverse of the IBB Index, which is the ETF that tracks the biotechs. And, we got in down here at 25. We're up at 27. I got an email today saying, hey, would you take any off here because of the rally that we got, hard and fast? And the answer is, if you want to take a profit, absolutely take a profit. I'm going to be in this thing for the longer term, meaning I'm not looking for this thing to collapse back down. I'm not looking for the IBB to skyrocket from here. As you know, I'm looking for lower prices in the market. There's going to be bounces along the way, like I said last night and the night before. Okay, and when they come, they're going to be sharp and fast. But I'm okay with that. But if you want to take a profit, what I suggested to the one member that asked me today, I said, take half off and put a break-even stop at the rest, and this way you guarantee yourself a profit. No matter what happens, you can always jump back in. If the market rallies next week and the BIS comes back down and you've taken a profit and you get stopped out, okay, when I tell you that market's going to pull back again after the next rally, it's another opportunity to jump back into this or other positions that are going to take advantage of the short side of the market. Completely and absolutely the right thing to do. Whenever anybody wants to take a profit, I'm never ever going to say no. I never turn my nose up at a profit. That's the way you make money in this business, okay? Having a profit is wonderful. Losing out on a gain that you had in the palm of your hand is what hurts sometimes. So absolutely take a profit if you want to, and nobody would ever shoot you for taking a profit. So with that, so let's see. We did the stock market. We did the bond market. We did the gold market. We did oil. Let's see. IWM was much weaker, by the way. Let's bring that up. Much, much weaker than the stock market, than the SPDR today. The IWM was down almost 1.5%, while the SPDR was down only 81 basis points or 0.8%. And until you break this low here, okay, the IWM is going to find some support in this area, which it did, although it was very, very weak today. So this is a good level of support here. And, you have a lot of support here, which coincides with the 200-period moving average. So, think about it. If we do get a rally next week, we'll see how far the IWM could take us. But the fact that that's weak, and you know how I always tell you that, the IWM and the NASDAQ are the risk assets, okay? They're the market leaders on the way up, and they're the market leaders on the way back, because those are the risk assets. That's where growth money goes, right? IWM represents small business across America, and the NASDAQ represents, the tech growth area, the hot stuff, cybersecurity, the biotechs, all that stuff. So those are your riskier assets, and that's where money flows when they want the growth. And that's where they come out when the market's coming apart, when they come out hard and fast. So if we get a rally next week, this is another area where we're going to look to short, because when the market cracks, and it has really good down days where we're going to see the volatility pick up, and you see those 1.5% down days in the spider, that kind of thing, and that's coming. Then your Nasdaq, Nasdaq and the IWM are really going to get hammered, and the IWM, a longer term downside target for the IWM is going to be down here at about 114. That's going to be a lot of support also. So 114, I'm not telling you that, as a definitive number now, but I've done some of these calculations. So, if we can catch a bounce in the IWM, and let's say it rallies up here, something like that, and then we're able to see, it, fall. That's when we're going to be able to make some dough in the IWM on the downside. So I'm watching. I'll let you know. I think we're going to end up taking a short position if we get a rally next week in the IWM. We'll see what happens. But you could see, look what happened. Once we broke this trend line, this has been in there for a long time. Once we broke this trend line and we retraced, we rallied back up, we came to the underside of it and broke back down. That's going to happen again. We're going to retrace and we're going to break that back down. That's the way markets work. Like I said last night, nothing goes in a straight line. We go down, we go up. We go down, we go up. And so what's going to happen with this market is you're seeing a stair step develop. You're seeing, a down move, an up move, a down move, an up move, a down move. And when you see lower lows, that's telling you weakness, right? Lower lows. Pardon my art. But lower lows. So lower lows is a sign of weakness, right? So when you have a market that does this, okay, and each and every time you bounce, you make a lower low, and what happens? You end up forming a channel, and you end up trading in a channel downward. And that's exactly what I think is going to happen. I think the volatility is also going to pick up something fierce. So on the next rally, we're probably going to take some more we are going to take some more short positions and unload the rest of the long positions, and we're going to get ready for the volatility to pick up in earnest. With that, folks, I'm going to leave it there tonight. I'm David Frost, My Strategic Forecast. Thanks for tuning in. Thanks for being members. If anybody has any questions, as usual, feel free to shoot me an email. I'm happy to get back to you as soon as I can. Take care, folks.